find it another better way to actually get compliance with the Competition Act.
Well, we've got another CEO from the construction space joining us right now. Now, Basil Read reporting an almost 200% rise in headline earnings per share. That's at 43.69 cents. The company also saw revenue from continuing operations climb from 2.7 billion rand, that's to 3 billion rand. At the desk now, Basil Read CEO Marius Haynes. Thanks for joining us today, Marius. I mean, what are your thoughts on the comment that Chris has said right now? Because that's something I've heard echoed quite a lot, that the Competition Commission thing leaves a scar across the construction sector that will hinder its ability to grow and hinder its ability to have a reputation outside of South Africa that one would like in many years to come.
Yes, definitely. It's for us as an industry, we would like to put this behind us and try and start with a clean slate. And in terms of the rollout, it's obviously a negativity hanging over us going forward. How will government deal with it? So yes, it's a concern, and I think if it can be addressed quickly, then it'll help to improve the sentiment going forward.
Do you think that you've done enough at Basil Read to stamp out any potential anti-competitive behavior?
Definitely. Everybody got a big scare, and I think nobody's going to do it again in our industry.
Yeah.
And we've done a lot internally, but it's even by putting in all those measures, it's just the individuals and anybody that has been involved in this period. It's such a negative thing that has happened that nobody is going to allow themselves to be dragged into anything of this nature again.
Again, a feature of your results is a huge bounce back in earnings, and my suspicion is that Murray and Roberts, it came externally. Your bounce back, what were the drivers behind the bounce back?
Ours is a combination of that over the 3 or the 4 different sectors. We've had good margins in our developments, although very small, but they gave us 25% margins. Our EPC again has had very good growth.
EPC, just for the listeners.
Our turnkey, and that's where we take the full risk on a project.
Yes.
And that was an outflow out of TWP that we sold, and that has grown significantly for us from a very, very small outfit, despite the sale of TWP, and it's posted 9% profit margins, operating margins, although on a relatively lesser turnover. And then the mining has reduced, but they still maintained. And if I include the results from our joint venture with our Marjorie contract in Botswana, we've shown mining has shown close to a 10% operating margin as well. So across the board, the other divisions have done well. Construction is still under pressure. We have not released a lot of profits from St. Helena because it's still early stages, but those risks has gone away. The possible risks, very well managed. So going forward in the future, that project is important for us. We've managed we took most of our forecast losses in the previous year. We're working out of the loss-making contracts, and we are now being able to price for double digits. That means 10% margins and more.
In terms of the construction side, that I understand is still under
very much under pressure. Yeah.
In terms of margins, also very small margins.
In agreement with Henry earlier, the best margins we're going to get out of construction now is around about 2.5%.
Yeah.
Yes.
Because the risks has become increasingly worse in the last month because of the labour unrest.
Right.
And then all of us is involved in the mega projects, and clients and their representatives are becoming more difficult in terms of settling contractual issues. So it takes longer. We do settle, but it does have an effect on your cash, so you've got to be cash positive, which we're lucky that we are at the moment, so we can handle some of those cash constraints. But certainly we're going into a more volatile contractual environment.
We have to wrap this up.
Okay.
I just want to ask one last question. Is Basil Read in a position right now you see potentially a bigger company could come and take over, especially your construction assets?
I've been asked that question quite a lot. I don't think so. I think the construction sector is not sexy at all. There's too much baggage still hanging around from the Competition Commission.
But by another construction firm?
And we would have had, somebody would have approached us by now, and we've had no overture, so I'm quite relaxed about it.